appreciate Enterprise Uganda for inviting me and giving me this opportunity to share about passive income. Belinda, you talked about me coming to talk about unit trust, but I was asked to talk about a guide to passive income, and unit trust is just not one of the options of passive income. So I'm here to share a very broad perspective on passive income. So my presentation is going to be that broad. And I just want to appreciate everyone who has joined. I don't take it for granted. I'm grateful that you have sacrificed your time to listen to me. And I'm hoping that by the end of this presentation, I shall have added value to each one of you, and that I shall have also gotten an opportunity to network with the many business entrepreneurs here. So allow me share my screen, please.
Yes.
Okay. Linda, please confirm that you can see my screen.
I can see a picture of a lady in yellow and a gray suit. Is that your screen?
Yes, thank you.
Okay, before Nancy starts with her presentation, thank you all for your introductions. If you have any questions, any comments, please put them in the chat so that when Nancy is through with the presentation, we can attend to them. Now, Nancy, I officially invite you to start your presentation.
Thank you, Belinda. So I work with UAP Old Mutual Insurance, and UAP Old Mutual is an insurance company that is in the business of making investment and insurance. As UAP, we are one-stop shop to offer all that you need to meet your financial needs. Like I said, we are into savings, so you can take up our short-term plans, life insurance plans, and our savings scheme. We have that the investment wing, where we do asset management. We are licensed stockbrokers. We are also licensed fund managers to support you in investing in unit trusts, and we also do property development. And in addition to that, we also have the Faulu Bank. So like you can see, UAP is a one-stop shop to enable you achieve your financial goals. And you can always approach us anytime when you need any form of financial support. So my objective here, at the end of this presentation, you should be able to understand and appreciate what is passive income. I'm also hoping that by the end of this, you need to be able to understand the different forms of passive income that you have, and also appreciate the importance of passive income. And by the end of this presentation, you then will be able to make an informed decision of what kind of investment can I take that can enable me what? And passive income. So when we think about passive income, I don't know what goes to your mind, but for me, what draws to my mind is me just relaxing at the beach. Probably I've taken a holiday out of, I'm on leave, or I've put my business aside and then just said, let me go and relax. But as I'm relaxing, can my money work for me? So that is what passive income is all about. It's about income that, you take very minimal work or effort to generate. And usually it's more than just, it's usually out of your traditional job, like currently, for example, where you're working, you're definitely involved. You have to go there every day, or you must wake up every morning and probably attend Zoom meetings and the like. But it's out of the traditional, you just relax and money comes in. Or you're not really running your business heavily, but the money is coming in. So you realize that also passive income is generated automatically. It doesn't, you don't have to push someone to give you that money that you have you have decided to invest in. You find it's just credited on your account and the like. So there is not much effort. But we also need to appreciate that, yes, there are very lazy ways of passive income, but there are some investments that you may find you first have to put in the effort, then thereafter you really relax and enjoy your money. So I want to start first with these, I could say the lazy ways, and I call those paper assets. Paper assets are investment products which are usually denominated in paper form. For example, you have a fixed deposit certificate or a share certificate or a contract note or an agreement. So those are paper assets where you do not do a lot. There is not much that you do, but at the end of the day, you're really earning yourself a good amount of income. So one of them.
Nancy?
Yes.
Are you able to use presentation mode?
Okay, yes.
Yeah, thank you.
Is that okay?
That's
Okay.
very great. Okay, thank you.
So with the fixed deposits, so fixed deposits are bank accounts offered by commercial banks that attract an interest yield. They are usually over some period of time. You get into the bank and maybe sit with your banker, and the banker, you probably share how much money you want to fix. You can have it for 1 month, 3 months, 6 months, and the like. But at the end of the maturity period, you receive back your money that you had invested together with whatever interest is made. So what happens is you negotiate or agree with the banker on what interest rate, based on what interest rate the bank is willing to give you. You fix your money, just have it there for, that's why it's called a fixed deposit. Fixed meaning that you'll fix a particular amount of money at a particular interest rate for that particular time. So if it is 10 million, you'll say fix 10 million for say 3 months, and the interest rate will also probably be given as 6, and that will be for that period. So that's how fixed deposits work. So after the maturity period, once the period elapses, you receive your money together with whatever interest that you've earned. So clearly, you realize that you have not done much work. All you did was give the bank your money, and they gave you interest. So we look at also treasury bills and bonds. Treasury bills are risk-free short-term financial assets, and they're usually issued by the government of Uganda. Treasury bills are short-term, so you can find that you have a 3-month, a 91-day bill, a 182 bill, and a 364-day bill. So which is on average, say 3 months, 6 months, and 1 year. So the bonds, on the other hand, are long-term financial instruments, and these are instruments that go for over 1 year. So you'll find maybe there's a 5-year bond, a 10-year bond, 15-year bond. The difference is that the other is short while this one is long. So in order to invest in the above instruments, you need to open what we call a CSD account with either a stockbroker or a bank authorized to open CSD accounts on behalf of customers. So once you do that, there's what we call auction calendars, on when you can invest and all that. So you invest in the T-bills for a particular month, or the bonds for the longest period, and bingo, you receive your money, especially for the T-bills. When the plan matures, you receive both your money and the interest that you shall have earned. For the treasury bonds, they're usually paid. We have there's what we call semi-coupons. So you'll be paid half yearly, in a sense that you'll fix your money there. Because it's a long time, you're paid semi-coupon payments. So you can imagine you fixed, say, 20 million, but after 6 months, you're receiving interest out of it. And then the following 6 months, you're again receiving interest out of it. So clearly, you're not doing anything. And for as long as you leave your money there, you keep having your interest. And We also look at shares. A share is a percentage of ownership in a company. And people who invest in shares are known as shareholders. So shareholders earn, you find that you're earning passive income in form of dividends or capital gain. Usually, what would happen is you buy part of a share in a company, and after, say, maybe they have declared their profits and all that, a company may decide to give you also part of the profit, and that is what we call dividends. Sometimes they may not do that, but you may find that maybe you bought this share at the initial public offer, say at 100 shillings, but over the years you find that it has grown to, say, 150. So that means that that is what we call capital gain. You bought at 100, but now it's at 150. So when you sell it off for what, that is passive income and a gain for you. So one is able to invest in shares through a licensed stock brokerage firm, and you also will need to open up an SCD account. It's usually at no cost, and thereafter you can invest in the stock exchange market. And as you invest in the stock exchange market, it's also important that you understand the stock exchange and follow what is happening in the market, because remember, you have invested your money in that company. So it's important for you to also follow and see, how is my company performing? Be interested in the different maybe innovations or what that they are coming with. What is their profitability? And that way it will inform you of, should I sell? Should I buy? And you need to also appreciate that shares are volatile. Times the price may go up, times the price may go down. And yes, sometimes you can lose some money. That's one thing you have to know. But it's passive income, because when they declare dividends, clearly, you just relax and just have a click on your account, see money coming, and there you paid your dividends. So it's a good passive income as well. I also want to talk about the mutual funds, that is a unit trust. So a unit trust is a collective investment pool, a scheme which pools a contribution of funds from different investors. So what happens is we have a good number of people pulling in their resources, and these pooled funds are given to a fund manager. In this case, for example, the fund manager would be, say, UAP, and the fund manager invests this money in a variety of assets that are able to enable the investor get a good return of them. Now, the beauty about unit trust is you find that you're relieving yourself of the burden of financial decisions in terms of, where do I invest in? Like, for example, I told you with the shares, you have to be on the lookout and try to understand, how do shares operate? Or if you want to invest in, say, treasury bills and bonds, you need to know when is the auction date, say, for the TBs, or when have they released a new maybe bond and the like. So if you are this person who's probably too busy, or maybe you don't really understand finance well, it might be hard on your side. So what do such people do? They relieve that burden and throw it to the fund manager. And at the fund manager, these are usually experienced professional people whose work is just to sit down and think through, these people who have given us this pool of money, what can we do, or where can we invest it to see to it that when we put it, for example, in this bond, in this bill, say maybe these shares, we're able to generate a good return of investment, and at the end of the day, share whatever interest we have made with the different unit trust holders. So clearly, you sit back, and all you'll see is that you've given the fund manager money, but he's churning it into more cash. So what happens is, these funds are open-ended, meaning you can enter the fund anytime and you can exit anytime. If, for example, you started a unit trust and opened with 10 million, and after 3 days you feel like taking your money, you can take your money. But what will happen is that and you will still have earned interest, say for those 3 days when your money was in the fund. So interest in the unit trust is earned on a daily basis. So every day your money is making money for you. And the beauty about the unit trust also is that your interest that is made is reinvested to make more money for as long as you do not remove your money. So that shows that there is power in you. It's actually better for you to leave your money there and see to it that it grows. It will grow more because the initial capital that you put in, together with the interest that you keep making on a daily basis, is being reinvested to make money. And that shows that is basically what we call the power of compounding. So clearly, your money is working so much for you. And also you have visibility over your money. There's an online portal where you're able to access and see maybe how much money, for example, did I make today? And if maybe I made, say, I'm making, say, 10,000 per day, what would happen if I increased my, whatever I've deposited? Maybe if I put in 2 million more into this fund, what difference would it make in my daily interest earning? Once you do that, you realize that actually your daily interest earning has changed. So that is what also motivates a good number of passive investors to take on the unit trust fund, because they're able to clearly see how their money is growing and how it's getting better by the day. The rates are floating, meaning that they are not fixed like we saw on the fixed deposit. The rates keep fluctuating, and well, the lowest it has gone to is about 10.36%, but it can also go up depending on the market conditions. Please bear in mind that the rates are set by what is happening in the economy. So it's a little bit different with the bank, with a fixed deposit, for example, where you can sit down and negotiate for a rate. With the unit trust, the rates keep floating, and the rates are determined by what is happening in it's a mirror reflection of the economy and what is happening. So investment unit trust can can be done through fund managers, and they are licensed by the Capital Markets Authority and the Uganda Retirement Benefit Regulatory Authority. So if you think maybe, is it okay for me to unit trust, but not only unit trust, actually, the paper assets that are out are all regulated by the Capital Markets Authority. So that should give you confidence that wherever you're putting in your money, at least you have regulators who are overseeing it, and their interest is on you, the consumers, that you do not lose your money. Oh, so this is just an pictorial explanation of unit trusts, and maybe just to show you the power of pooling funds. So you find that everyone is giving the fund manager money. Maybe someone who has just retired brings in his money, his pension funds. A business person, I recall the time during COVID, that was a time when we, as UAP, we realized a very good number of people bringing in their money to invest. Because remember, as a business person, shops were closed, and you have your capital there, and you're thinking, why should this money be seated here when it can make more money for me? And we also realized that some people were able to keep afloat in their business because they put in their capital into this unit trust. And as a result, for some of them, the interest that they earn was money that they were using to pay, for example, their employees. So it kind of helped to keep them afloat as they waited for the economy to open. So you see how this passive income helped some business people to keep afloat, because out of their capital, they were earning money to pay their employees, and the business did not collapse. So we also have maybe a contractor, an engineer, you've received funds, the project has not yet started. Where are you keeping that money? Bring it, put it in the unit trust, let it make some money for you. When the contract starts, then you can get your money. Like I said, the fund is open-ended, so you can get your money anytime you need it. We have a number of investment clubs or associations. Sometimes when you start, and most times when you start as an investment club, you still don't know, because remember, when you want to invest, you must first save. You cannot invest without saving. So most investment clubs and associations first start by saving, pulling funds. Now, when you're bringing in those contributions, ask yourself, where are you keeping that money? Is that money still just being held in the bank? If it is being held in the bank and it's not making money for you, it would be prudent of you to put that money in a unit trust. And as you brainstorm on where you want to invest, or as your capital increases, then you'll find that you shall have made some good passive income for your fellow investment club members. So this is basically just a pictorial view of how the unit trust would work for each and every individual. We've showed you even for school fees. I remember still during COVID, where people were not so sure when the schools would open and the like. For some wise and prudent people, they brought their money and put it in the school fees and put it in unit trust. So when now the schools were opened, they simply just came and picked the money and paid school fees. While for those who ate their school fees, you find that what did they do? They went borrowing, looking for school fees, yet you had that money. So if you have school fees, don't eat it. Take it to the fund, and when the time comes to pay school fees, channel it to that fund, rather to pay the school fees. So, like I earlier said, what I've just been talking about is the lazy forms or passive ways of making money. And this is usually for people, maybe you're too busy, to make money. There's an element of having time, and then there's an element of not having time. Now, many of us, you find, we do not have time. No one has time to, for example, go and run their own business, but they have a lot of money. So you'll find that putting your money in these different paper assets helps you to make money. But there are people who probably have the time. For example, you'll have time maybe to venture into real estate and set up maybe rental units or something. Now, once you've set up these rental units, this again becomes what? Passive income for you, because once your rental units are set, all you need to do is give the tenants the account number, and every end of month, you just check in. Has it, you get, this money, this rental income has just hit your account. So that's also a passive form of income. Or you may find there's some people who are probably good authors. You take time to write a book, give it your best, and then you remember you have spent time writing that book. You can put that book on an online stores like Amazon and what. Now, people are buying your book, but clearly there is not much you're doing. All it's just there and you're earning income, even people who have published online courses. So you find that, yes, you took some time to work, but now you're relaxed and the effort that you put in is now working for you and you're earning passive income. So just to make you appreciate that, there are lazy ways of earning passive income, but there are also active ways of getting to see to it that you earn passive income. And these are just some of the few examples I have cited, but I think there are many others that we can get. So what are the benefits of passive income? Like we have seen, it improves your personal finance. So you imagine you're earning income through rental income is coming in, you're getting income through your unit trust, the bonds, the coupon, you're getting those coupon payments. So you have different forms of really enjoying your income without any stress. You realize that it also gives you a freedom of time. Like now that you don't have to go that extra mile, stretch yourself. And this works especially for people who are very employed and so much engrossed in their work, you don't really have that time to do something. And you know that if you have to engage in business and for your business to succeed, you really have to be fully involved. Now, if at this moment you're not fully involved or do not have that time, then this is when these different forms of passive income come in handy for you. You don't have the time, but money is you're receiving passive income. It also reduces stress and anxiety in a sense that there's a lot of, I must say, and entrepreneurs will appreciate that starting up a business or running a business is not easy. It's not. I know many of us have tried, some of us have failed, some of us have succeeded, but I will tell you, it's not a bed of roses. It's really, entrepreneurship is really for those who are resilient and determined. So sometimes you don't want to go through. Some people don't like stress, and they're like, you know what? I think for me, I will take this. I'll take this toll. And if you have large sums of money, it's really stress-free for you to make passive income in this format. It's also an additional cash flow and makes you more confident about your financial future. Because if you look at your different form of say assets that you've invested in, you think about you imagine, okay, how am I going to retire? And when you think about your retirement, you're looking at, okay, I have this 17-year bond that is giving me money half yearly. Then, okay, my unit trust is also operating. That can be my emergency fund. You're receiving rental income. So clearly you see, you are not so worried about the future. And I guess that's why it's important to have this discussion such that we start to think about, say, the evening of our years. I mean, retirement starts, I was told, retirement starts when you start to work, because you cannot achieve or start achieving these things at the age of, say, 40, 50, 55. We start now. So such that in the evening of your years, clearly, you're just enjoying your money and you're very sure that your future is certainly bright. And I believe all of us are striving for what we call financial independence. Financial independence is basically can you survive if, for example, your job is taken off you, or maybe you have stopped doing the business, or you're no longer active with your business. Can you maintain the kind of lifestyle that you have always had, even without your job? So, in other words, have you saved all that amount of money that can enable you to maintain that lifestyle that you always had, even in your luxuries inclusive? Because you see, for example, when you're employed, some people have transport allowance, some people have access to the gym, all on the company. But if, for example, we put that off, would you still go to the gym? Would you still hang out with your friends and just enjoy your company? So that is the kind of thing that we are looking at, that can we have these forms of income that can enable us, even without an employer? Or have I set up my businesses that can enable me to achieve this kind of financial independent lifestyle? Yeah, so for my parting shot as a guide to passive income, we just need to see how to, one, save regularly, because we all know that if you're not saving, clearly there's no way you're going to earn passive income. The first thing that you have to do is first save. Then when you save, invest prudently. You have collected a good chunk of money. So where are you going to invest this money that is going to give you passive income? And then many times people don't tell you, but it's important to protect your investments. And that's why insurance is here. You may find someone has rental units. and that asset is, for example, not protected maybe against fire. This is an investment of say over 500, 600 million, and you're getting rent from those assets, but the building, for example, is not insured. And let's just say a fire happened. Your whole investment goes to the drain, yet you would have protected your investment that is giving you that rental income. So it's important to protect your the investment that you make. And then it's also important to read widely. Try and understand, get to know the different forms of ways of making money, but also be very, could I say, prudent, and also mindful that there are different people come up with different schemes and what. You need to understand this investment that I'm getting into, are they regulated? In the event that anything happens, do I have a fallback position? That kind of thing. So you need to, before you even invest, try to understand the different investment that you're getting into, or what are the risks associated with this investment. And you know, life is about business, and investment is about risks. How much risk are you ready to tolerate? Even in the different assets that we have shared, some people are risk averse, others love to take risks. Like, for example, people invest in shares. Prices can go up or really down and you lose, but you're probably ready to take that risk. So you need to read widely and understand what investment you're doing. And finally, let's also spend wisely, because it's also important, to be frugal. If you spend carelessly or what, you find that you won't have that money to save or invest. So as we go about our business or our life, let's be frugal. There are certain things we can cut down on, and that money we can save and invest. So these are just my contacts. In case you need to know more about saving, investment, and insurance, I'm happy to help and support you in your journey. Do you have any questions? And thank you for listening.
Oh, thank you very much, Nancy. I'll kindly request that you leave the slide that has your number on, because we already had a request for your number. Yes, we are going to take questions and contributions. Thank you very much for that very insightful presentation about passive income. And this is a business recovery series with Enterprise Uganda. It is the Global Entrepreneurship Week. And I'd also like to inform you that if you would like to register for the business health check, Enterprise Uganda has business counselors who can come to your business and advise you on how to run your business so that you can make money that you're going to save from and to be able to earn passive income. Yes, Nancy said the first thing we have to do is save, but I'm thinking the first thing we have to do is to make sure our businesses are running properly so we can have a portion of the money to save. So now it is about 40 minutes after 9. We are going on until 10:30. Nancy is here. We are going to answer your questions. You can put up your hand or you can send questions in the chat. Nancy, we already have some questions here that I think you can take on firsthand. The first question was minimum amount for the unit trust, and can I deposit monthly? I think you take a couple of questions, and then there's also William Worodria who is asking, who is saying, please clarify the difference between umbrella trust, balanced funds, and money markets. With the current inflation, what would be the best option? Nancy, can you take those for now, as we will take people who are raising up their hands after? If you'd like to ask a question, you can raise your hand or you can type your question in the chat. Nancy?
Okay, thank you. The minimum amount for investing in the unit trust is only 100,000 shillings. And yes, you can decide to invest. Like I said, these funds are open-ended. So you can invest monthly, or you can put money anytime. If, for example, you got a windfall, or someone gave you money, a birthday present or something like that. Now we are getting into the end of the year. Some employees get what we call the 13th check, and you wonder where are you going to put that money. That's where you can put it. Or you do for business entrepreneurs, you get this hot business deal, it's a good chunk of money, and you don't know where to put it. So you can put it there. So bottom line, the minimum is 100,000. There is no maximum, and then you can put your money anytime and anytime, anywhere. And there are a variety of options in which you can deposit funds in the unit trust. One, for UAP Old Mutual, we have you can pay through mobile money. We have MTN Momo Pay, so you can deposit through MTN Momo Pay. I'll probably share the steps. You can do an online transfer from your bank to our account. You can also invest through the agents, like the different bank agents. Now, for most unit trust accounts are held at Standard Chartered Bank. So you just need to go to a Standard Bank agent and deposit your money. You can also deposit on Standard Chartered ATM cards. So you find that they are cardless, so you can also deposit at the ATM of Standard Chartered. But as you're depositing your funds, please ensure that you include your unit trust number and your name, such that your unit trust account is immediately updated with the deposit that you have made. And then someone asked about, it talks about we have different forms of unit trust. Yes. So there are 3 forms of unit trust. That is the money market fund, the balanced fund, and the umbrella trust fund. Now, I'll explain these funds based on longevity. When you look at the money market fund, and like I said, as now I'll talk on behalf of UAP, we are professional fund managers. So what happens is we can either invest in put your money in money market or balance funds or the umbrella trust fund. And with the money market, you find that we're usually investing in short-term assets. When I talk of short-term assets, we're looking at assets that are, say, less than 1 year. So you'll find in the money market, maybe what is being invested in there is treasury bills of 3, 6, or 12 months, or what we call deposits or fixed deposits, because we do fixed deposits with the commercial banks. And like I said, because we have a big pool of money, we are able to negotiate for very good interest rates. So you'll find that in the money market, it's usually we're investing in short-term assets. So in terms of return on investment in the money market, because it is short-term, the return is not as high. When you look at the balanced fund, as the name suggests, it is balanced. And why is it balanced? It is balanced because in this particular fund, yes, we'll invest in the short-term assets, but then we also then add what we call shares, stock, or equities that I talked about. And we all know that when you invest in shares, sorry to say, we may not know, but when you invest in shares, you need to, shares are not something you invest, say, for a very short term and then expect a return on very quick return on investment. No, shares are something that you have to do like for a long time, because the prices, you can never know when a company will do well and the like, and it needs some time. So because of that, you find that if you're investing in the balanced fund, I think it's the only fund in which you might have to keep your money for at least 3 years, or lock your money for 3 years. Why? Because we have invested it in with some companies and the like. And like I told you, a prudent investor would not invest in shares for a short time. We need at least some time. So people who are high risk takers don't mind taking on the balance fund, because you need to know that when you invest your money also in the balance fund, chances of maybe losing, the chances of yes, you can make very good money, but also you can lose money, because trading in shares is more or less like a gamble. Then finally, the umbrella unit trust fund. This is, I think, most popular, because in this one, we're investing both in treasury bills and then also long-term assets like the bonds. And because we are investing in very long-term assets like the bonds, I guess the return on investment then speaks volumes. And that's why I guess a great number of people have embraced the umbrella trust fund. I hope I've answered your question.
Okay, thank you so much, Nancy. Ronald Kirunda, can you please switch on your mic and ask your question? Your hand is up. Ronald?
Yeah, yes, thank you, Nancy. Actually, I have two comments. The first one is just a supplement on examples of passive income. I want to add the aspect of planting commercial trees as one of the additional other sources of or avenues of investing in passive income. And the number of people have taken it up in Uganda. The second comment I want to add is on the advantages or benefits of having, passive income. I would say that it helps one to maintain control, of the family, be it a man or a woman. You are able to speak, especially with some level of authority. If you are not running around to your children, running around to your wife or relatives for support, it increases the freedom in terms of how you manage your family. And I think this is important because, especially when you have reached retirement and your income has gone down, there is a tendency for children to look at you almost like a burden. Even a phone call from a parent who is, struggling financially, the children will think twice. They said, Mosea again is calling. So this is very important, the financial freedom, in that when you have retired and you have money, the children will be looking to, let's go and visit Mosea, let's go and visit Jaja, because they know that even you will pay their transport, you provide upkeep. So this is really important for me, and for the man to be able to retain control over your home. Without money, the home is really at a very high risk of disintegration. And this is the thought is I should say it. Thank you very much.
Thank you very much, Ronald. Nancy, we have some questions in the chat that we will take on concurrently. But right now, Elizabeth Lugo has put up her hand. Elizabeth?
Thank you very much, Nancy, for this very good talk. My question is, with all those passive incomes you've given to us, which one has the biggest loss in case you have to break it up? Say if I have a bond of 20 years and at 5 years I have a very big issue and I have to break it up, where is the loss? Even unit trust, even treasury bills, if I take a treasury bill of 1 year and at 6 months I want to break it up, what is the loss involved so that I know which one to invest in? Thank you.
Okay, thanks, Elizabeth. So Nancy, I suggest you can take on Elizabeth's question. And we also have some feedback in the chat on what you've been talking about. So you can look at the chat as well.
Okay. So thank you, Elizabeth, for that good question. Now, what I've realized from most of these passive investments, and that's why we're looking at how do we curb, one of the ways of curbing inflation has been through these investments. Because like you talked about, for example, you've given a very good example of a bond. If you invested in a bond, where is my loss? Now, many times you find that in terms of, I could say that the losses are very minimal in these paper assets, because you find that there is a way your capital is actually preserved. And one of the things that Capital Markets Authority is actually tries to see to it, and especially when they're regulating, is can we see to it that we reserve consumers' capital? If Elizabeth has given me, say, 20 million, can we see to it that Elizabeth does not lose the 20 million, but if anything, she at least earns interest out of it? So you gave an example of a bond. And remember, with the bonds, there's the semi-coupon payments. So you'll find that maybe you've done put 20 million, but the time you're being paid, maybe your semi-coupon, you're probably earning maybe say 1 million. And the next semi-coupon is probably more or less the same amount. So you realize that your capital is intact, and the chances of you, say, losing your capital are very minimal. And I've also realized that in terms of even what we call them, say, the management fees or the initial cost, because you keep earning interest, the cost of you even taking that bond is washed or wiped away through the interest that you're earning. I'll give an example, say unit trust. I don't know whether many of you are aware, but there is a management fee for unit trust of 2% per annum on the interest that you make. So as UAP, I don't know, the payment that you make for the service that we give you is 2% of the interest that you earn. So it's actually the money that we pick from you is not from the capital, but rather from the interest that you earn, and it's 2% per annum. And please note, it is prorated, so you don't even feel the cost. So that's the beauty about these forms of investment. Chances of you losing money are very, very minimal. Belinda, Elizabeth, I hope I've answered your question.
Okay. She will write to us in the chat.
No, yes, you have.
Okay.
Maybe the addition is, in case I need my money, can I get it as and when I need it?
Oh, okay. Yes, you can get your money as and when you need it. Or I think maybe your concern was, I know, like, say, for example, for fixed deposits, if you have, say, fixed money, or if you've agreed to fix money in the bank, say, for 6 months, and you want your money before the maturity period, the bank may penalize you for breaching the contract, because we agreed 6 months and now you're coming for your money in the second month. That's where maybe you might lose some of your money. But now, say, with open-ended, with unit trust, for example, these funds are open-ended, like I said. If you give us your money today, tomorrow, if you learn, if you got an emergency or something happened and you need your money, you can always just request for it. There is we have what we call a redemption form. You fill that form. If you sent it, say, by 9 a.m., you could probably have your money by 3 p.m. in the afternoon. Although we say give us at least 2 working days. If we're not able to give you money that same day, then at least you'll get your money the following day. So at most is at least 2 working days to have your money back.
Okay, thank you, Nancy. We have questions in the chat that are related to what you are talking about. So let me try and see if I fix my money in UAP, can I change it to unit trust without losing interest? That is Josephine Naiga. And then, do you have a way of checking on how the account is doing through an app? That's Maria Chen. Kambona Wilberforce, the MM option is a very friendly one. However, UAP could explore the option of bringing Airtel Money as a deposit option as well. And thank you, Emmanuel Sanyus Safali. You're very passionate about insurance, and thank you so much for your contribution here. So, Nancy, can you attend to those three comments, and then we can move ahead?
Linda, I'm trying to look for the chat line.
The chat, you can't see the chat?
No, I can't see. I can see Wilberforce talking about how with 100,000 he earns 30 per shilling, 30 shillings
Go
per
a little
day.
bit up. Okay.
What was Maria Chen saying?
Do you have a way of checking on how the account is doing through an app?
Yes. Oh, yeah. We have an online portal whereby once you open up an account with UAP, you will receive an email from our client relations team, and that email guides you on how to access the online portal. So yes, we have a portal and you can access it anytime. You'll be able to see, like Kambona has posted, he's able to know that he earns that amount of interest because he has accessed his own, per day, because he has accessed his online portal. If, for example, Kambona deposited 2 million today, he will be able to check on his online portal and see that the 2 million is actually reflected. He will also notice the difference in terms of daily interest earnings, because with that 2 million, it means now his daily interest earning is totally going to change from 30 shillings to something better. So, and that is what also motivates our customers, because some people actually, I've had clients who challenge themselves and say, Nancy, you know what, I want to be earning, say, 50,000 per day. So Nancy, how much do you think I should add more? So it motivates you, you get encouraged, and you're like, yeah, I think this is working for me, let me put money. So that portal has really given people confidence in the unit trust fund.
Okay, so we move on to
Morinda.
So yes?
Someone said, if I fix money in UAP, can I change it to the unit trust without losing interest? Yes. I don't understand when she says if I fixed money in UAP, but I'm thinking probably she has a fixed deposit account in UAP. So can I change it to unit trust without losing interest? Yes, you can. You can actually change it. You can change it, Josephine. You can.
Okay, so let's move on to Maureen Dahura, who is asking, compared to NSSF savings, which of the above would be more lucrative? Nancy? Compared
to NSSF savings,
yes,
which one would be more lucrative?
Yes.
So it depends on how you're looking at it. Like I said, with the beauty about unit trust is the bit of compounding. And I think that is what makes unit trust a little bit unique, because you're guaranteed that, you know what, I have this interest here, but it's going to be reinvested together with the capital. And then tomorrow, that interest is definitely going to change. So it's going to be more. So in terms of your interest being reinvested to make money is, I think for me, is something that is worth considering as something that is greater than investment. With NSSF, you know that you wait to, you were later informed of maybe what rate, what was declared and the like. So you need to think through and see what is giving you, in terms of the unit trust, you're looking at the bit of your interest being reinvested and the power of compounding. Whereas in NSSF, it's a particular rate that is declared. That's it. Those are my thoughts.
Okay, and I think you can contact Nancy if you need more information on that. Most of us have asked if the unit trust can be liquidated at any one time, and I think Nancy has responded to that. Yes, they can. And also the interest is earned daily. I am trying to summarize these questions. So what other benefits? This is Oscar Ayebaziwe. What other benefits with getting a unit trust? Is there insurance form, some form of insurance attached to it? How does it work, especially if an investment club took up a unit trust? Have you seen that question, Nancy, from Oscar Ayebaziwe? It's the third last question in the chat.
Yes, I have seen. Okay.
Yes.
What other benefits come with getting a unit trust? One of the first benefits of unit trust is in terms of interest, the interest rates. I think the interest rates are relatively lucrative if you compare with what's happening in the different markets. The interest rates, like I said, like currently it's now I think at 12%. And one bit about the unit trust is you leverage on the fact that it is not just a fixed rate. Take, for example, if you put money in the bank, you're locking your money, say, for 6 months for maybe a particular rate of, say, 6%. And then, so you therefore know that I'm locking it for, say, 6%. Now, the beauty about unit trust in terms of interest rates is that the rates keep fluctuating. And sometimes they fluctuate to your advantage. A rate can push to 12.5, 16, and the like. So what happens? If the rate goes up, you're also going to earn more. And the beauty about it, like I said, you have your online portal to see. You can actually tell, by the way, say usually end of month, we send clients their updated statements to show them how their money has grown. But even you can look at the portal. You can also download a statement and look through it and see how your money is doing and how maybe the rates went up to your advantage. So one of those benefits is the interest rates. Two, one thing that I probably didn't talk about is that unit trusts are exempted from withholding tax. And for me, anything, if I can avoid the tax man in any way, that's really very good. And it is it's statutory. It's not like you're going through backdoor. What it is statutory that unit trusts are exempted from withholding tax. So that means that you're earning your interest as is. Remember, if you decide to go, say, and invest in TBs or bonds, say, alone, there's a withholding tax of 20%. I think for bonds below over 10 years and then 10 years. So now you imagine they're going to take that percentage of, say, imagine you earn, say, 1 million in terms of interest. So we'll take off 20% of 1 million. 20% of 1 million is 200,000. That means as an individual, you're going to lose 200,000 and take home 800,000. With the unit trust, you enjoy that benefit. You're earning all your interest as is. You take your 1 million home. So for me, that is a worthwhile benefit. Anyone would want to earn all their interest. So besides with being exempted from withholding tax, like also I earlier pointed out that the beauty about, one of the things about investment is the ability to look at your investment and watch it and see how it's growing. And this has worked especially for the diaspora clients. I have many clients abroad, and many of them are facing challenges of, you send your brother money or your friend money to do this business for you, or probably even help you construct. You come back home, there is no home, or probably the business has collapsed. So some people who live abroad have just decided, you know what, let me have my money in the unit trust. I can watch it here. And when I go home, probably I'll spend time and then do my own things and invest my own self. So you realize that this fund is not only, it's not only for people living here, but even guys living abroad can invest in these funds. Yeah.
Okay, great. So yes, I earlier asked people to introduce themselves. I see Donan Biabazare from Four Ways Group. You are welcome. We also have, let me see who is here. Someone from South Sudan, that is Tabule Isaac Victor, and he's into custom clearance transportation. That is if you want to deal in, do business in South Sudan. James Babumba is doing solar fruit drying. Rosemary from Crow Investment, you are a young upcoming circle. And this is Daphne Nafula, Home of Shades. Oh, Daphne, how are you? Good to hear from you. They are installers of carports and security systems, and they teach, translate, and interpret Kiswahili. Interesting. So Nancy, someone did ask if you can open an unit trust account in a foreign currency. Is that possible? That's Mawa Zakaria.
Okay, at the moment, it's not yet possible. It's not yet possible, but I think it is something that is in the offing. But at the moment, we're doing Uganda shillings.
Okay, great. Do we have questions? Let's put up our hands. This is the business recovery series. Today we are talking about passive income. For us to be able to have passive income, our businesses need to work to give us money to save, and then we save that money for investments and then watch it grow. Nancy's number is on the screen and her email address, so you can get in touch with her after this. And yes, we are taking questions now. Mugenyi Isaac, please mute your mic. Nightingale Birunji, can you ask your question? Nightingale?
I'm Nightingale. If I wanted to earn 50,000 per day, how much would I have to put in the unit trust?
Okay, that's a question for you, Nancy. People are already doing the calculations, and I really like that. Mawa Zakaria, is your hand up again, or it's an old hand? Mawa?
Yes. Yeah.
Is it a new hand?
New hand, yes.
Okay, go on.
I like fixed deposit business. I look as if my money is so secure. So what I just want to know, what risk are there in fixed deposit, more especially trust unit? That's why I want to know the risk, because sometimes I can deposit the end of the day. If there are some other risk, what risk are there?
Okay, Nancy will answer that. Kigwe Godfrey, please ask your question.
Yes, am I through?
Yes, we can hear you. Yes, we can hear you, Godfrey.
Yeah, thank you very much. Thank you very much, Madam Namatemi, for giving me the opportunity, and thank you very much, Madam Apio, for that good presentation. Okay, my question is in form of a clarification, more on that compounding effect in relation to unit trusts. I don't know if I'm clear there.
The compounding effect, what would you like Nancy to throw more light on?
In relation to how it works.
Okay.
And yeah.
I think she got you. Nancy, can you answer those questions for now?
Okay, so I'll start backwards from compound effect. By compound, what we mean is that if, for example, you started with 100,000 shillings, let's just look at 100,000 shillings. That means one of us posted that with 100,000 shillings, they're earning 30 shillings per day. So that means tomorrow, by the end of the day, you're going to have 100,000 30 shillings. Now, what is going to happen is your initial capital together with the 30 shillings is going to be what? Reinvested. So that means the following day, your money is not going to be 100,000 30 shillings, but it will probably be maybe 100,000 maybe 75 shillings. Now, that day, the money that is going to be invested is 100,075 shillings. So that means the following day, it's going to change now again from probably now 100,100 shillings. So you realize that the capital, the money that you put in, together with the interest that you're making is always and is reinvested. And that is what we call what? Compounding, the power of compounding, the compounding effect. I hope I've clarified that.
Okay.
Then someone asked about, what? Yes?
Yeah, tick. I was saying tick, yeah, I've got it well,
Okay, great, thank you, great, that's great. Then in terms of what are the risks associated with, say, investing in, for example, unit trust, what you have to know is that the risks are very minimal. Why? As first of all, as fund managers, we are highly regulated, and there is what we call a policy investment statement that guides, or the Capital Markets Authority guides us on what we are supposed to invest in. Now, we invest in highly regulated assets, meaning we're investing with the central bank and the commercial bank. We majorly invest in treasury bills and bonds, of which you have seen that these investments are risk-free. And then even when we are doing, for example, fixed deposits, we do not just deposit with any commercial bank. We actually deposit with like the 5-tier, commercial banks. And remember, banks are also regulated by Bank of Uganda. So in terms of, there's a lot of regulation that takes place, but also in addition to that, we have our auditors, Ernst & Young, who monitor the operations, what is happening, and they do this independently. So in terms of the risks, I could say the risks are really very minimal. Then I forget the lady, she asked how much should earn if she wanted to save 50,000 shillings. I would have to do that, which I cannot do. I'd have to do that computation. I request that probably you reach out to me personally or individually.
Yes, yeah. I actually know that UAP gives you an interest rate calculator that will help you know how much money you will make after a certain period of time. So I guess when she gets in touch with you, she'll be able to work on that and go ahead and open her unit trust account. Have we answered all the questions, Nancy? I hope I'm not interrupting you.
Let me just see.
Yes, I think we have. Okay, Robert Komakech from Gulu, you're welcome. And greetings to the farmers in Gulu. Then Kambona Wilberforce is saying, this isn't a question, but a request for consideration. Mobile money deposits are currently allowed for MTN. When will Airtel money come on board? Then Francis Alemiga is saying, what's the tax rate on investment or dividend for unit trust? I think you say there's no withholding tax, but now is there any other trust? Then Mawa Zakaria is asking again, what's your interest rate for the unit trust? Yes, I think what is the interest rate? Let's answer those, Nancy. We'll take one more round of questions before we come to the end. Nancy?
Okay, the interest rate, like I earlier communicated, these interest rates are not fixed, but they are floating. And like I said, the interest rates keep fluctuating depending on what is happening in the economy, the demand, the supply. Currently, the interest rate is running at 12%, but it can go to 12.5, it can go to 13. It can change. So what you need to appreciate is that the rates keep fluctuating, and they indeed fluctuate to your advantage. And maybe what you can base on is at least the lowest rate maybe we have gone down to is 10.36. So if you want to use maybe an average, you can look at an average interest rate of 10.36.
Okay.
I think, yeah. Oh, then Kampunda asked about we should look into getting an Airtel line. Sorry, an Airtel Momo pair now. I've taken note of that. We'll look at it and see. I'll share that feedback. Thank you.
Okay, Monica Chomugesha from Bukulula Girls Secondary School in Masaka. You're very welcome to this discussion. Okay, we are taking our last set of questions. It's now 10:18. This is a business recovery series with Enterprise Uganda during the Global Entrepreneurship Week. We kindly request you to follow the link if you want business health counselors to visit your business for a business health check. It is free of charge. They can come and talk to you and advise you on how you can, put your business back online so that you can be able to earn money that you can save and invest in the unit trust instruments that Nancy is talking about. We are taking our last set of questions, and I'm waiting for people who have raised their hands. Do you have any more questions? I don't see any questions in the chat.
I can see.
I don't see any hands up.
I can see a question from
Mawa again. Okay, yes, Mawa, we'll hear from you.
Yeah, I like the fact that the percentage is 12% compared to other banks. I want to know, is there any other branches in Koboko or Aru? Because I'm just within nearby. I really pick interest in that business.
Okay, Mawa, irrespective of where you are, you can still actually open up a unit trust. COVID taught us how to actually do business and reach out to many. In order to open up a unit trust, you don't have to go to a physical place or something like that. I could share with you the forms online or via email or even on your WhatsApp. And this is it's a Word document, it's a PDF document. You can either decide to fill it as a Word document or a PDF document. For those who have electronic signatures, you can append your electronic signature on the proposal form, and all you do is attach your national ID, both the front and the back, your passport photo, and then you share with us a bank statement. Or if you're not comfortable sharing with us a bank statement and your account operates with a checkbook, you can give us a check leaf. So, Mawa, if you sent these documents to me via email or even via WhatsApp, we can proceed and open your account. Then what would happen is you receive an email from our client relations team, and then I am certain that probably where you are, there must be agent bankers there, or you can go to your bank and then do an online transfer. You can either do an EFT or an RTGS to transfer your money from your bank to our bank in Standard Chartered Bank. So you can actually do this business wherever you are. You can actually get yourself a unit trust. Please reach out probably via my phone number or email, and I will share with you what you need to get yourself a unit trust.
Okay, thank you, Nancy. Okay.
Yeah. Someone asked whether we offer loans, but no, we are not in the business of.
Yes, I think loans we go to the commercial banks. I see a question here. Does a unit trust have a specific fixed period, like for fixed deposit accounts? Nancy?
No, it doesn't. Like I said, unit trusts are open-ended funds. When I talk of open-ended, it means you can enter the fund anytime and you can exit the fund anytime. So there is nothing that maybe can I save? Can I pull out my money after I'm fixing for 2 months or for 3 months? No. But we encourage you to, if you want to make good out of the unit trust fund or investment, it's ideal or good for you to have your money in there for the long haul. Why? Because you have seen, as I have explained, the power of compounding. If you're going to put your money there and you keep maybe taking some of the interest, taking some of it, and you won't realize the value of the unit trust. That's why I tell people, if you're investing in unit trust, put money that you know. A unit trust should act more or less like, could I say, an emergency fund? You have a bank account. What you have as your bank account is maybe your operational money. That is money to enable you run your daily expenses and what your rent is covered, your fuel is covered. If someone mabugo, all generally your operational costs for you as an individual. How much do you need, for instance, to survive? That is money that you should have on your operational account. Anything beyond your operational account, have it on the unit trust and leave it there and let it make more for you. But do not bring your operational money, please, to the unit trust. And then the unit trust turns out like an ATM. No, that's not what it should be, because you're doing yourself a disservice. Actually, some people put their money in there such that they think about the bit of, I need to send a redemption form, for example, to Nancy. So you ask yourself, but do I really need this money? Do I really need to get money from the unit trust? So it's better than, an ATM where like I can just go swipe my ATM and get the money. So that's why people come to, and so take this a unit trust like an emergency fund where you're piling up money to take care of it. Anything, maybe if an eventuality happens, like say you lost someone you didn't expect, these are some of the things where you probably say, let me run to my emergency fund. Or like I said earlier, you're saving money for maybe a holiday. You started in January, maybe you wanted to go on holiday and you wanted to achieve a certain amount of money. It's December, and now I need that money. You take it away. School fees, put the money in there, you take it away. But a unit trust should not be looked at like a bank account where you think you keep putting and removing. You're doing yourself a what? A disservice.
Okay, great. Thank you, Nancy. It's 5 minutes to the end of our business recovery series with Enterprise Uganda this morning. I would like to thank you very much for staying with us for the last 90 minutes. And yes, I did ask you to register. I will call out some people who are here. Chris Kutosi, thank you for attending. Emmanuel is an expert in, Chris Kutosi is works with Planet Textiles, and they do lots of things: school uniforms, corporate wear, protective wear, and they also do training in knitting. They are located in SETA. Emmanuel is an expert in clinical medicine and community health. He's a medical consultant as well. Jeremiah Caballo is into engineering and real estate. And who else is here? Bwenje Anthony, Omnis Innovations, and Annette Kabarunji is into arts and crafts to designs. Okay, guys, I would like to remind you that it is still the Global Entrepreneurship Week with Enterprise Uganda, and we are taking a moment to, to recognize all the role that entrepreneurs play in solving society's problems. We are also looking at how we can, strengthen our businesses so that they can be able to recover from the bad economic downturn that we have been going through. I would also like to remind you that Enterprise Uganda does business health checks. Please register. I'm going to ask someone to post the link in the chat room right now. Register on that link. We'll have a business counselor come to visit you and talk about your business. It is free of charge. We would like to thank you so much for your time today, and remember that the business recovery series happen every Thursday, so be sure to join us again next week. And I'm sure today's presentation will be shared. Those who were not here with us at the beginning, the presentation will be shared, and Nancy's contact is still online. I would like all of us to engage her so that we can secure secure our future. Yes, there's the link for the business health check. Thank you so much. My name is Belinda Namtebi. I've been hosting the Business Recovery Series with Enterprise Uganda on behalf of Ronald Mukasa and Rosemary Mutiable. Until next time, have a great week and happy saving and investments. Goodbye for now.